Hello, welcome to the weekly technical analysis review for Monday, November the 26th. I'm Rafael Boyadjian, currency analyst at xm.com. The pairs we're going to be looking at for this week are the euro dollar, the pound dollar, and the dollar index. Starting first with euro dollar, we can see that the near-term bias for the pair is looking rather neutral at the moment. RSI is slightly below the 50 neutral level, but the stochastics are still trending downwards, pointing to more downside momentum to come. At the moment, we can see that earlier today there was resistance at the 61.8% Fibonacci around 1.1377. Clearing that level, we could then see the pair making testing the 1.14 handle, which is the 50% Fibonacci. If there's a break above the 50% Fibonacci, that would strengthen the upside momentum, and then the next hurdle would come around the 1.1470 region, which is near the November top, as well as where the 50-day moving average currently stands. However, if we were to see the pair resuming its downtrend, support should come from the 1.13 handle. A drop below the 1.13 level would clear the way for the 16.5 months low 1.1215, which was the November low. Below that, we've got the 1.1180 region. That's the 161.8% Fibonacci extension of the uplift from 1.13 to 1.1499. And then below that, the next key level to watch is the 1.11 handle. In the medium term, though, euro dollar is still looking following a slightly negative path. Let's now turn to pound dollar. Again, it's looking fairly neutral at the moment for the pair. Prices are being capped by the 61.8% and the 78.6% Fibonacci retracement levels of the uplift from 1.2693 to 1.3174. To the upside, resistance should come from the 61.8% Fibonacci at 1.2877. Above that, we've got 50% Fibonacci at 1.2933. However, we would need to see a run towards the 1.30 level. Just below that, 1.2990 is the 38.2% Fibonacci, and is also the 50-day moving average. We need to see a break above the 50-day moving average in order to shift the focus back to the upside. However, if we do see further losses and we see a break of the support at 1.2796 to 78.6% Fibonacci, we could then see that 2.5 month low 1.2693 coming into focus from late October. And then a drop below that. The next key support level to watch is the 1.25 level, which is the 138.2% Fibonacci extension. In the medium term, the pair has been forming a symmetrical triangle, so that points to a further narrowing of the range until we see a potential breakout either to the upside or to the downside. And finally, moving on to the dollar index, it's in the medium term, it's looking fairly bullish for the index at the moment. In the near term, having a look at the stochastics, they are pointing upwards, but there's some weakening of that momentum. We can see the MACD histogram is currently running below its signal line. At the moment, there's immediate support at the 20-day moving average. That's around the 96.54 area. A drop below that, we could see the 50% Fibonacci retracement of the downleg from 96.95 to 94.45 coming into focus. That's around 96.20. Dropping below 96.20, then the next key level would be 95.80. That's the 23.6% Fibonacci. And then below that, the dollar index would test the 50-day moving average around 95.60. And then not too far below that, we do have the November low of 94.45, which, if bridged, would potentially shift the medium-term bullish picture to more neutral one. However, if we do see further upside, resistance should come from, and also, well, that was also today's intraday, near intraday peak around 96.95. Clearing that hurdle, we could then see another attempt at the 17 months high of 97.50 from earlier in November. Breaking above that level, the next key resistance to have in mind is 97.88, which is the 161.8% Fibonacci extension. That's it from me. Thank you very much for watching, and have a great day.